All right, so let's begin the show with our special segment, Meet Your Fund Manager, wherein we talk to a fund manager and know all about the strategies related to that particular fund. But today, the fund in focus is Axis Multicap Fund, and we will talk about this category and the market movement ahead with Shreyash Devalkar, Head Equities, Axis Mutual Fund. Shreyash, good evening and welcome to the Money Show. So clearly, I want to begin with discussing about the current market movement, where so far what we've seen since last week is that market is moving in a very range-bound territory. What, according to you, could be the triggers behind the trajectory going ahead, and also will this pace continue of the market?
So, if you look at a market from long-term perspective, when the rally started, especially post COVID, actually it went one way till somewhere around October of 21, and after that it consolidated a lot. And then after from the peaks of October 21 to Jan 22, we are somewhere around 8 to 10% up. So why I'm just bringing in this perspective is when we use rally, the words like that, point is that the market has consolidated. It is a lot in last 1.5 year. And then last few months, what the rally we have seen, it has yielded additional 8 to 10% return at the indices levels in from the peak of October 21 to Jan 22. So that if you look at that behavior or that pattern, I think that that considering the earning growth, considering overall valuation, one should expect that the markets will consolidate and give you moves based on the earning growth trajectory, which is generally closer to the nominal GDP growth.
Right, Shreyash, going ahead, we also have the policy announcement this week. What are your expectations on that?
Actually, RBI has been highlighting the risk of inflation has not gone behind yet, and that's where if you even if now if you look at that, some of the food item related inflation is up. So in that sense, one can remain hawkish. But having said that, some of this item and the inflation here is transitory, and that's where one need not take a step of hiking. So in that context, I think that it would be neutralish stance.
All right, let's talk about the multi-cap space, and then we'll also talk about your exposure in the fund and your strategy for the fund. So multi-cap space actually has been a very exciting space for investors, especially the run-up that we've seen in the mid-cap and small-cap has really caught on to investors. But the question over here to you is, talking about mid-cap and small-cap space, Shreyash, do you think there is steam still left in this particular category? Are the valuations, according to you, overstretched?
Actually, when I look at large, mid, and small cap spaces, probably one need to look at them in terms of the content what you own in them, rather than just trying to say that these large companies versus mid and small, and then high beta, low beta, or high risk and low risk. So that is one way to look at it. But the other way to look at it is if you see in economy. The consumption part of economy has more representation in large cap companies and large cap indices and large cap funds. The B2B part of economy, that is investment and exports, and especially manufacturing exports, these two part has more representation in mid and small cap categories. So if you look at chemical, auto ancillary exports, or manufacturing goods exports, so these are having more representation in mid and small cap categories. So if you notice, all these three categories, large, mid, and small, actually they are complementary to each other. They are not either or. So the large cap is more about consumption, mid and small cap is more about manufacturing stories of India and so on, and investment story of India. So in that context, these all being complementary, and it gets reflected more in the multi-cap as a category, because here you have to have 25, 25, 25 in large, mid, small. So in that sense, this category actually represents the the exposure to individually all elements of India growth story, and not just tilted towards consumption in case of large cap category, or tilted towards mid and small cap category, which are more in investment and export. So in that context, yes, one should look at it in a holistic manner, and it gives you exposure to overall economy of India. That's where this fund category definitely stands out. When it comes to valuation, yes, the valuation definitely in the B2B categories are way higher than their pre-COVID levels. And that's where, again, its representation more being mid and small, that's what is getting reflected. While in case of large caps, which has more representation in consumption-oriented sectors, their valuations are not way higher than their pre-COVID levels. And in that context, the re-rating of the consumption-oriented sector has not happened, because probably some of them were already pricey even earlier, while the re-rating has happened on the other hand in the mid and small. So there is definitely no risk reward based on valuation in choosing one category versus other. And that's where what I commented is that one should look at it more as a representation of economy rather than risk reward of or a trade-off of one versus other.
So, Shreyash, talking about the sectors that you have in the portfolio, what's the kind of allocation across market caps in sectors?
Yeah, so broadly, we should be somewhere around one third in mid and one third in large and small cap category, and somewhere around 25% in 26% in mid cap categories as of last month.
Right, right. And sector-wise allocation in the fund?
Sector-wise, the exposure, as I said, one should look at it more from the B2B versus B2C and so on. So in that context, obviously financial services sector is absolutely high, though not compared to the relative. So absolutely, it is somewhere around 25% plus. While the sectors which are in the B2B part of economy or manufacturing part of economy, which are more in say auto ancillaries, they are there. Some of them are from the healthcare. Actually, in healthcare, we have a good exposure to hospitals as well. We have good exposure to consumer durable, real estate companies, and consumer services. So it's broadly diversified. It's broadly diversified across sub-segment of economy.
Shreyas, do you also see large cap coming back in the focus in coming months, or the kind of reading you have for this particular market cap? Because right now what's driving is definitely mid cap and small cap space, but then you think this will large cap will just take a lead on?
So large cap, in my opinion, will definitely outperform in a scenario when consumption-oriented stocks do well. So if you look at large cap composition of say Nifty or any other benchmark large cap indices, then you will notice that the representation of financial services is very high. Then combined representation of financial services, auto OEMs, and FMCG companies would be closer to 60% as such. So this bigger pack, and whose growth is more dependent on the consumption story of India. So that part, if it starts delivering consistently across the board and more widespread rather than only in the upper part of K. So if that growth comes widespread, then there is a high probability that the large cap as a segment will do well. And as I highlighted earlier, valuation wise, the valuation of large cap oriented sectors are closer to their pre-COVID levels compared to the B2B segments, which are more in mid and small, and that's where that provides you additional tailwind.
Shreyas, talking about mid cap and small cap, now this particular category has a wider universe, compared to a large cap. So, how do you try to mitigate the risk that's involved in this particular market cap category to reduce the volatility and also to keep up with the momentum of return that the investors are witnessing now?
Sure. So that here the fallback is always your process and philosophy. So there we have quality and growth as a philosophy. So if you try to adhere to good quality companies, so when you buy any mid or small, and for that matter large as well, what you carry is a business risk. You carry a business cycle risk. You carry management risk, and you carry valuation risk. So generally, what is observed as lesser is the risk on the management side, the lesser is the risk on business quality side. Business cycle risk is what we can't predict. So obviously, one can predict it. There are some which are more cyclical, some are less cyclical, but business cycle risk is what we can take as such, and we can be through it through the cycle. But when it comes to businesses, that whether the really business is good, whether it has a moat, whether it is a competitive advantage, if you really assess those right, and if the business withstand through the test of ups and downs, so that is actually the bedrock of your downside, because business cycle will come. Sometimes you may be able to predict, sometimes you may not be able to predict, and in that scenario, this having a companies which are basically good businesses with good management would always help, and that actually helps you in reducing the risk in the portfolio.
All right. So now, looking at the way you are strategizing the fund, and the kind of view you have across market caps, large, mid, and small. So, Shish, do you think it's time to increase your allocation in multi-cap to reap all the benefits that you've predicted for the coming quarters?
So when it comes to allocation part, as always, it is said that it is individual's decision based on its risk appetite and how much one should have exposure to large, mid, small, based on time horizons, etc. In my judgment, this 25, 25, 25 and plus kind of model of multi-cap is generally broadly all encompassing, and it because it gives you representation across the board. In that sense, if someone don't want to really diversify into too many funds in its portfolio, then multi-cap definitely stands out as a good option, wherein one don't take call on large versus mid versus small, because again such calls are easier said than done, and that's where when you are in certain percentage in large, mid, small, always that is always helpful, rather than taking a call and now I want to go more in large or more in mid. Those things are seldom successful. So in that context, multi-cap as a category definitely is would be considered if you don't want to diversify in too many funds as such.
All right, Shreyash, last question to you, and then we'll wrap up this discussion. Your view on the current earnings season and also the expectation for the next quarters.
So earnings season obviously has already passed in most of the segments, especially in the large cap. And so far, what we have observed that if I want to comment more from the sector's point of view, then on the exports part of the businesses, what we have observed is earlier IT shown sign of slowdown. Then the chemical companies shown the sign of slowdown. Now in this earnings season, one observation is some of the manufacturing exports are also showing some sign of slowdown because of the exports especially. So that's how the export part of stories have panned out. When it comes to consumption part of stories are concerned, they are yet to give you a positivity which market wants at the current valuation. So that's where it is. Otherwise, the result season has been good for those sector as well. Definitely, many of the companies have shown you margin expansion because of the lower commodity costs in respective sectors. So that has been the great performance driver and earning growth driver for most of the companies. It's both in consumption oriented as well as industrials companies. And when it comes to investment part of economy, I think there even now most of the companies are showing good results the way they were showing for last few quarters.
All right, Suresh, I think that will be all. Thank you so much for being on the show and explaining us all the details on the Access Multicap Fund and also the market movement going ahead. On that note, we slip into a short break on the Money Show, but then post that, let's talk about AI deepfake scam, which is actually targeting grandparents. So what are these kind of scams that we are going to highlight, and how do you protect your grandparents from this cybersecurity scam and fraud after this break? Welcome back. You're watching The Money Show with me, Kavita Thaplayal, and let's talk about cybersecurity scams. AI-based cybercrimes, that's cybercrime, and that too targeting grandparents. Lately, there has been an increase in cybercrime cases against grandparents, and fresh cases have been reported wherein senior citizens have lost money over a WhatsApp call. The fraudster uses a deep fake voice technique to do this fraud. Now, let's understand all of this and how can you protect your grandparents from these kind of particular online frauds. I have Ritesh Bhatia, cybercrime investigator and cybersecurity consultant with me. Ritesh, good evening and welcome to the show. So there is this a new kind of AI deep fake scam which is typically targeting senior citizens. Can you just explain us the recent incident that's happened?
Thanks, Kavita, for having me on the show. And once again, thank you for raising this kind of awareness. As I always say, it's the media that has created the utmost awareness in cybercrimes. So thanks once again for that. So Kavita, here, what is happening recently? What happened was an episode that happened, happened in Kerala with a particular person. He got a call from his former colleague where they used to work together. Now these are retired senior citizens, and he got a call from his ex-colleague who called up, and it was like a audio call over WhatsApp where he said that how have you been and everything, all those kind of things and all. And then later he called back. He said, listen, I'm at the airport and my sister-in-law is stuck and has an emergency and some operation needs to be done. If you can just transfer 40,000 rupees. Now this man, he said, okay, he got a little alerted and he said, let me verify if this is true. And so he told him, do a video call. He did the video call, and on the video call, he could see his ex-colleague who were working in the same company. And then the ex-colleague over the video call was telling him, if you could transfer this 40,000 rupees as such. And so this guy then believed in it. And obviously, because the voice is the same, the face is the same. So he just made a transfer. And later on, it turned out to be a fraud. Now, viewers would be wondering, how is this particularly thing possible? So now we are in the era of deep fakes. So the voice was cloned, even the entire face of that particular person was cloned as such. So what, the someone who was sitting over there was not even a look alike of somebody. In fact, it was a computer, AI generated video and an AI generated voice. And similar such scams, Kavita, have been happening world across. It actually happened in China. It's happened in Canada, and the chances are that this is just going to increase. Not chances. In fact, I would say yes, it's going to increase like anything, and that's the reason. As of now, the only solution is awareness. Kavita.
Ritesh, whenever we meet, we are just discussing about something new, okay? And a new type of scam, a new type of scam or a fraud or a latest case. Now, talking about the specific AI scam, we did not see much coming up from the data protection bill also regarding AI and the kind of online frauds. At least what was expected was not given in this bill. Now, having said that, tell us something, what is the reason behind senior citizens being targeted, because it's just, we are not talking about only one scam that's targeted to senior citizens. There are a lot of variety of online scams which are particularly targeting senior citizens. What's the reason behind that?
Yes. So firstly, let's understand one thing. Let me give you an example of like recently there was a spike in something called as the grandparent scams. So what is this grandparent scam basically? So here, so this is a very old scam wherein somebody would call up the grandfather, say, listen, your grandchild is met with an accident or is arrested or something like that, and then they would say, please transfer money so they could help them as such. And at that point of time, they couldn't make the grandparents, make the grandchild speak to the grandparent, because this is, I'm talking about around about 8 years back, 10 years back. But this same grandparents scam has come up in its new avatar, which is the AI based avatar. So here what is happening, it's actually the grandchild calling the dada or the nana, saying that, listen, I met with an accident and I have been arrested, I need certain money. The caller ID, the phone number is also spoofed, because that's pretty easy for scamsters to do it. The number is also spoofed, the voice is spoofed, the video is spoofed. And if you say, are we talking about some Black Mirror episode? No, this is actually happening. Even if you go and Google, like, grandparent scams AI, you will see a whole lot of them right now, like, happening in Australia, in Canada, in US. So we are not far behind now. So here, when the grandfather hears, he definitely gets emotional, he or she, and at that point of time, you only and only trust. And now you trust because you hear the voice, of the child, you hear the voice, you see the video of the child. So there is no reason for you, like, not to believe that this is not your child, and that's the reason you transfer. So number one, why they fall victims? They are not very well aware about the latest in cyber threats, because every day there's so much new, and it's difficult for them to catch up as such. I think we, the younger generation, we've been very irresponsible, because what we have done, we've just given them the gadgets and we've not trained them. We don't make them aware on a daily basis. Maybe we get irritated, maybe we say, oh, forget it, you need not know. But I think this is something that they need to hear, they need to talk more than they need to do us. And secondly, it is their trusting nature. Our parents, grandparents come from an era where trust was the key thing. That time there was nothing like cyber. But on cyber, it's exactly the opposite thing, that there is nothing like trust. Kavita.
So, Ritesh, just to elaborate on the point where you also said that, certain kind of hand-holding is needed for grandparents or for senior citizen. How exactly can one do it? Because, see, that's the kind of age we are talking about where it's very difficult for them to learn something new, How, according to you, can grandkids or maybe, to their parents, how can one handhold and teach them different aspect of online security, basic things like how to even surf the net? I think, not clicking on the link that looks very attractive and appealing to you. How can you do that?
Oh, well, I think, ET Now can do it very well, because you guys have done so many shows about it. You can actually create a 1 hour
I
or a
get
2 hour
through you.
session on it. You can create a
Right.
2 hour, like you can compile all your videos and you can just put them up. That itself will be good. There is nothing that you people have
Idea.
not learned.
Ritesh, that's a
Everything is
brilliant idea.
there.
I think I'm going to work
Yes.
on this and I'm going to take my
Yes.
producer's help also for this.
Absolutely. Just
Thank
just
you.
compile the video, categorize them, that
Right.
this is cooking, this is AI based frauds, and that's more than enough. You have done shows in
Yeah,
like
yeah,
Hindi and English
yeah.
both, so that's more than enough. But secondly, I think there's a big responsibility on the kids and the grandkids. Of course, even I feel
Right.
guilty about, because even when my father asks certain things, I get irritated as such. But then if we have given them the device, it is our responsibility now to be with them, to tell them, and not get irritated. Of course, this thing applies to me also.
All right. Going ahead, the last question to you. A lot of things are expected from the data protection bill, but then on your lines of expectation, 1 to 10, where would you rate this bill? All the questions and all the concerns that were raised, are they all answered and addressed?
I don't think so. I would rate it only 5. Ideally, we as the largest consumer base in the world, the largest user base, I would would say, of internet and of generating data, I expected a much more strong bill, which was there like somewhere where, when Justice Sri Krishna came out with it. This looks to be a very, very watered down one, giving a lot of power to the government also. And everything has left that as and when it will be decided, So we are already quite late with the data bill. Nevertheless, it's a great thing. At least we have come with it, and I hope the ministry catches up and adds a lot many things, especially like look at AI things. How would you there is no mention about the new age technologies, about the emerging technologies which are collecting so much of data, especially in this era of artificial intelligence, blockchain, and Internet of Things, IoT. A lot much data is being collected. So then what about that? So I think those provisions need to be added immediately, is what I feel.
All right, that will be all. Thank you so much, Ritesh, for being a part of this show. And let's have you again next week on the show, and let's talk about more aspects of cybersecurity. Thank you so much.
Thank you so much. Bye-bye.
All right, so we move on to a short break, and post that, let's talk about creating digital assets. Now, a lot has been done on this particular topic. We know cryptos, we know NFTs, we know monetizing through your websites or social media handles. But then what all actually goes into monetizing all your digital assets? How can you, if you're a content creator, which apparently a lot of them are these days, how can you actually create a different line of investments and earnings for yourself? We'll get to know all of this after this break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now we talk about various asset classes on this show and how to invest in them, how to maintain the momentum of earning in it. But do you know, if you're a content creator or someone who is maybe a tad bit digital savvy, you can create your own digital assets, make money out of it. What exactly is the concept of digital assets, and how we are talking beyond crypto, NFTs, and just having a website and different patterns of monetization? Let's understand all of this. We have Sumit Gupta, founder of The Viral Patch, with me. Sumit, good evening and welcome to the show. The concept of digital assets or creating digital assets is not very new. Ever since we've had crypto, NFTs, and all the kind of social media platforms come up, and especially the wave of content creators, we've heard a lot about having digital assets, make money out of it, making it as one of your investment avenues. But then now it's even more important to talk about it because there's so much of competition. Every other person you see, Sumit, is a content creator, okay? You yourself mentor people and show them the right way as to how can you create digital assets. Tell me something, what are the basic outline understanding that one needs to have in order to create a digital asset? Because so far what we've seen is a person becomes a content creator, and by default, because they are on there so many platforms, and because there's a surge of followers and people who like your content, you try to monetize it. It becomes like a by default act. Okay, how do we strategize it? Okay, how do we consciously take this step towards having our digital assets? How do we go about it, Sumit?
Right. Thank you, Kavita, for having me here. I think to create digital assets, the first thing you have to do is to identify the type of asset you want to produce, right? It can be an ebook, to an online course, to a software, to even a template or a music video, right? You should focus on original content that caters to your target audience needs, right? And that as a content creator, you would know the best. Ensure that there is copyright or intellectual property protection in place, right? And design a user-friendly interface if you're going to a website or creating an app for yourself. It's very important to implement a monetization strategy that suits your asset, because, for example, you can have a subscription model, which is like, famous among all the content creators right now. You can choose the right distribution platform, because it's very important. For example, for music videos, you can, music or videos, you can maybe use YouTube, maybe Spotify for that matter, right? Digital marketing techniques are very important. You need to understand how it works, because you also need to promote your assets very effectively. And if the asset involves user data or transactions, you have to prioritize data security by diversifying your digital assets. You can maximize your impact and value in digital space. Over to you.
Right. Right, Sumit. Okay, so moving on, if through examples you could actually help us understand the kind of verticals one needs to have to create these digital assets.
So as I mentioned, right, so it can be, an ebook, a course, or even a template, right? I've seen a lot of people selling their short-term courses, on various subjects or niche topics for that matter. And I think that's a very good strategy wherein you understand your audience and you are pitching your audience with a subscription for that matter. Collaborating with other creators or businesses can also result into joint creation of digital assets or exclusive content for that matter, right? It helps you build a lot of audience, and also you build your own database or an email list wherein you engage with them through newsletters or content, right, which is exclusive on that platform or app or website that you created. It creates an overall impact, and you can diversify your asset. It helps you to establish yourself and your authority in the market, and obviously you become an expert in that particular field, right? So it's very important to create your niche, having an understanding what your audience wants and creating an asset around.
So, now the catch over here is to monetize it, because the kind of platforms that we are discussing about, it's not, obviously you need to be very exclusive and your content needs to really stand out. But looking at the kind of variety, an end user has right now, how do you stand out and how do you try and monetize your content? Because that's the important trick of this entire trade.
I understand. So I think monetization is definitely one of the most challenging tasks you do, because you can create content, even your content is engaging, but I found most of the content creators trying to, maybe you're struggling with their monetization part, right? I think it takes time for you to understand how it works, but definitely the best monetization strategy that you can have is a subscription model that you have in place for your audience regarding your content or the specific niche content that you create. You definitely have to present it in a manner, or you have to take it as a product of your own, or as your own baby, where you nurture it. You have your own digital marketing expertise in place where you're trying to promote it as well, not only through your content or maybe through other content creators, or maybe through Facebook, Instagram, other advertisements in place, right? So it's very important to use all these tools, understand how it works, and go after the audience which is already out there, who is listening to you right now on a particular platform, and convert them into a paid subscription.
But then now, till the time you have a paid subscription, for example, if you're talking about that model, till the time you reach that level in terms of content, in terms of variety, in terms of having engagement, what all tools would you recommend?
So I think then the influencer marketing platforms come handy, right? So you have so many brands out there who understand the value of the content that you're producing, or the kind of engagements that you bring from your audience, right? And all the brands definitely value that, because they understand that it's your niche and it's your audience that you've created over a period of time. And you can definitely make money by collaborating with brands, having those sponsored collaborations, or maybe stories, or maybe specific reels, or maybe a YouTube video created for that particular brand, or maybe doing a nice integration within your content for a particular product. I think that turns out to be first monetization strategy that any content creator goes out and works with.
Sumit, having a very strong social media presence, how can that impact and that in fact help you, creating better digital assets and having good traction on your website, or maybe anything that you're trying to build as a digital assets? How can a strong social media presence is needed and can act as a very important tool which can help you monetize also, which is the ultimate goal?
Yeah, definitely. I think it all starts with social media, because everybody's on social media. If you look at, on an average, like people are spending like close to 70-80 minutes on an average every day on different social media platforms. And it gives you an opportunity to capture that, audience out there who's there on social media. So you start a journey from social media. You see how, which category of content you're creating and how you can engage audience within that niche category of content that you're producing. Based on that, you move to a layer wherein you work with influencer marketing platforms and you work with brands and create stories or integrations which can help you to monetize. And the third step is obviously to work on a model wherein you are actually charging your audience for that niche content that you're producing, or maybe your niche music or maybe videos that you're producing for that particular subject.
All right, Sumit, last question to you, and then we will wrap up the discussion, because I really want to understand. How exactly are we talking about building up digital assets, and what's the kind of pay scale and what's the kind of monetization that's really working? If through examples you could explain.
So I think right now, in terms of digital assets, the best way to monetize right now is influencer marketing platforms, because brands are really understanding the importance of influencer marketing as a space in India specifically, though it has been used worldwide as a mainstream media for now. But if you look at India, it's a very small market and it's just waiting to explode. Larger brands to smaller brands, big brands like FMCG companies to D2C brands to BFSI brands, they all understand the importance of content creators and how these content creators can actually create impact, not only give them the eyeballs, but also can lead to a very good ROI as well, right? So I think that's the first thing that a content creator should look at. Brands also are very keen on trying to understand what the influencer marketing is all about and content creation is all about, and they are all gung-ho to spend advertising dollars on this as a platform or this as a medium of their advertising.
All right, Sumit, that will be all. Thank you so much for being on the show today and helping our viewers with every aspect of creating digital assets today. All right, we move on, and that's the last bit of the show today. There are a plethora of funds available in the market to invest your hard-earned money, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Hemant Ustigi, Vice Invest Private Limited. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 8657974571. You can also email us your queries on themoneyshow@etnow.tv. So, Hemant, good evening and welcome to the show. We'll take up the first question of Mr. G.V. Raju, and he has 50,000 to invest in mutual funds for 2 years. That's a time horizon for him, and he wants to understand or have a recommendation of best funds to park his money for 2 years.
Well, Kavita, since he wants to invest for 2 years, obviously he can't take too much of a risk. At the same time, I think the attempt should be to invest in an option where he can get slightly better return than bank FDs. So in that sense, I think what will suit his time horizon is short-term income funds. There are 2 funds that I'm recommending for him. He can choose one because he's investing 50,000. He doesn't require 2 funds. So it could be HDFC short-term debt fund and Nippon India short-term debt fund. But if he's someone who can take slightly more risk and he has some flexibility in the time horizon, maybe another option that he can consider is equity saving funds. Now, these are the funds which primarily invest 20-25% in equity, the rest in arbitrage and debt, in a manner that arbitrage and equity is more than 65%. So the taxation is of equity funds here, which means that when he will withdraw his money after 2 years, he has an opportunity to get higher return. At the same time, he'll end up paying only 10% capital gain. So these are 2 options depending on the kind of risk he wants to take. He can choose one of these.
All right, we move on, and the next question is of Kantaraj from Bangalore, and he says that he's invested 1.5 lakh through SIP in Tata Digital India Fund and ICICI Pru Technology. For the next 5 years, how is the trajectory of these sector funds? We don't have him on the phone line, I guess, otherwise we could have asked him about the rest of his portfolio also, because these are sector allocations specifically in these 2 funds he's talking about. Although these 2 sector funds standalone are doing good for themselves, but then having a sector allocation and that to 2 funds, how over diversified is he in this particular space?
Well, Kavita, I think what we have seen is, as far as the IT sector is concerned, we have seen the IT sector has had very tough time in the last 15 to 18 months. That's primarily because the inflation was very high, it's still very high, and there were obviously rising interest rate by the Fed. Obviously, the impact of that was on the sector. That's why we have not seen the sector doing well. In fact, there are instances where there are negative returns. But important thing is that on the long-term basis, I still feel that this is a sector which has the potential. Now, for him, he has remained invested through this most difficult period of 15, 18 months. And luckily, because he's investing through SIP, he's been averaging his price down. And I think as and when the sector will turn around, he'll get the benefit of that. So my own sense is that it may take maybe a couple of more quarters for this sector. Once Fed decides to pause interest rates, maybe the next step would be that there will be some interest rate cut at some stage. That's a time when you'll see IT sector doing very well. So, like I said, because he has been investing during this most difficult phase, I believe, and as you rightly mentioned, both these funds are doing very well in terms of within the sector performance. If you see, both these funds have a very good track record. So, he can continue with that. Of course, there is an important aspect that has to be seen as what is the exposure to these two sector funds vis-a-vis the overall portfolio size. Because it's not available, we can't really comment on that. Also, I always believe that whenever you choose a sector, if you have other funds in the portfolio, please try and see how much exposure you already have to those sectors through the other fund. If you already see, because IT is one sector where you'll see, healthy exposure by all the funds, especially the flexi cap, multi-cap, or the large cap. So have a look at that. Like I said, decision to continue or not will obviously consider different factors. But my belief is that since he has gone through the difficult time, he should continue.
All right, we move on and we have Mr. Kishore Kumar on phone line with us. Hello, Mr. Kumar. Good evening. Thank you so much for sending us your question.
Good evening.
Okay, so good evening, sir. You're calling from where?
Tirupur.
Tirupur. Okay. So you have
Tamil
never
Nadu.
invested in. Got it, sir. You have never invested in mutual fund, equity mutual funds, or
No.
have you?
I haven't. I have been an investor for long, for past 15 years.
Okay. All right. So right now, other than mutual fund equities, equity mutual funds, you want to know, you want to understand about bonds, which are a safer mode of investments for you. You're talking about the retirement corpus, I believe.
Yes, of course, you're right.
Okay, so UP Power Scheme you have invested in for a long term, but then you don't know much about it, and you have bought stocks also for yourself. Do you have a stock portfolio also?
I reduced investment in stocks, in equities. Now I reduced it, and I've gone to mutual funds.
Sure. Okay. All right. Okay, so since you've already invested in this UP Power scheme for a very long time, as in that's the long-term horizon, apart from that, any new investment that you want to make into bonds for which you want a suggestion or recommendation from
not
our
only
expert?
bonds, I want, not only in bonds, I want to know whether any other asset which can suit me for the age of mine.
Okay. Have you tried senior citizen savings scheme? Have you given it a thought?
I just invested 5 lakhs in that post office, that scheme, senior citizen scheme.
Okay. All right. So Hemant, he's clearly looking at his post-retirement corpus and he cannot take much risk. He's invested in this particular scheme that he's mentioned in the question. Apart from that, any other safer investment instrument that you might want to recommend?
Well, I think before I say which are the other mentioned, I would like to really highlight the fact that I can understand that once you retire, post-retirement, you don't want to take too much risk. But I think it's always important to remember that the risk of inflation is always there, even after retirement. So it's important to work out a strategy, choose funds in a manner that you're still able to, stay ahead of inflation. So I think that's very, very important. You already mentioned about a couple of, investment options, Kavita. So my belief is that apart from mutual fund, obviously there are small saving fund, there is post office monthly income scheme, there are government bonds, there are REITs, which can give you, a regular return. But in my view, the systematic withdrawal plan, if you invest in mutual fund and if you opt for systematic withdrawal plan, because there it gives you the option of choosing the kind of asset allocation you want to give. Plus, I think when you opt for SWP, it has many advantages. You get fixed return, irrespective of the market condition, the returns are more tax efficient. And as I mentioned, it gives you an opportunity to stay ahead of inflation. So my view is that, for example, you can consider something like a balanced advantage fund. Consider that. Other option which we mentioned will give you return, but the returns are not tax efficient, the returns are not high, and you will not be able to beat inflation. So in my view, I think the mutual funds still have to be an integral part. And if he's referring to UP, Power Corporation bonds, well, of course, they are relatively safer option. Obviously, they give him a quarterly interest. But again, like I mentioned, that the post-tax return is something that you need to be more concerned about rather than just looking at the gross return.
All right. Is there anything else, Mr. Kumar, that you might want to know? All right. We move on. We'll take the next question, which is from Binoy. And He wants to know the format of systematic withdrawal plan.
Well, Kavita, as I just mentioned, that systematic withdrawal plan is a smart mechanism that allows you to withdraw a certain sum on a fixed date, through the mutual fund. So there are two ways of doing it. One, either you have to accumulate a corpus over a period of time. And if you've not been able to do that, or if you have already built a corpus, then you have to invest it in a fund and then register for a systematic withdrawal plan. It can be done either offline or it can be done online. In SWP, you have the flexibility of deciding how much money you want to withdraw every month. When do you want this money to come in, at what frequency, and how much you need to invest. Once you do that, irrespective of market condition, that money will keep coming to you. For example, if you choose a monthly option, it'll keep coming to you. And I think more importantly, like I mentioned, I just want to reiterate that if you choose some like Balanced Advantage Fund, they give you an opportunity to make your money grow at the same time, get your regular income. But you need to be a little careful in terms of how much you're drawing. So my personal preference or recommendation would be look at withdrawing 5 to 6%, so that a fund like Balanced Advantage Fund can still give you 5 to 6% in addition to the income that you get. So it's a great mechanism. I think it's a great tool for all those investors who are struggling to get regular income, at the same time would like to ensure that their money grows at a rate where they can stay ahead of inflation.
And SWP as a feature can be applied to equity as well as debt mutual funds, Hemant?
Oh yes, absolutely. It can be done with any fund. That's the beauty, depending on the kind of risk profile you have. But like I said, if your intent is to make sure that your money continues to grow in addition to the regular income that you get, then you have to be careful in terms of what you're selecting. Of course, it also depends on overall portfolio size. Also, how much money you need to get out of this through SWP. That will determine the kind of funds you should be looking at.
Sure. All right, I think that will be all, and that's the time we have on the show today. Thank you so much, Hemant, for being on the show and helping our viewers with their financial planning. And time to sign off, but then I'm going to leave you with our WhatsApp number where you can send us your portfolio-related questions, be it mutual funds, insurance, tax, loan, anything that you want to understand about your investment portfolio. WhatsApp us your question. You can also email us your question, and we'll get it answered by our experts on the show. Thank you so much for watching. Goodbye.